it was badges for everything that you do in finance, I've got the full sleeve. People say the high street's dead. It's not, it's just evolving. Above every one of those shops is the opportunity for people to live. It's not just about having enough stock for a first-time buyer. It's about creating something in the chain that becomes aspirational to create the space for a first-time buyer. Let's deal with the stigma that bridging has. It's there to bridge a period of time for you to create wealth through property. So that is to enable you to buy a property worth X, do some work, make it worth Y, and then crystallize that end value to make money for yourself. It's your best friend for working fast, but it's your worst enemy if you're on it too long. So you only should be using bridging if you are.
Mark your calendars. The 2025 Property Developer Show is coming to 5 major cities across the UK, bringing the best service providers and developers together under one roof. On the 5th of March, we kick off in the first show at Milton Keynes, followed by Bristol on the 30th of April, Birmingham on the 16th of July, and then we're heading north to Manchester on the 10th of September, followed by our final stop in Newcastle upon Tyne on the 15th of October. Don't miss out on connecting with other developers, service providers, and industry leaders. Visit propertydevelopershow.co.uk to book your free ticket today. Welcome to another episode of the Property Developer Show, the podcast. Today, I'm joined by next year's headline sponsors, Roma Finance, in particular, Michael Allison. Michael, welcome to the show.
Hi, how are you?
I'm very well. It's not a massive trip for you over to Liverpool, based in Manchester, Roma guys.
Well, I'm from round here as well. So I called in to see my dad on the way. So that was very nice to do. So yeah.
You hide the accent well.
Well, I think that's years of being on the telephone. I think that was, I started off in call centres many years ago. So
nice. So we'll start there, to be fair. How do you sort of get into the commercial lending, bridging world?
I'll be honest with you, when I was at school, the careers teacher never took me to one side and said, "What do you want to be, Michael?" And I said, "I'd like to be the commercial director of a property bridging company." You kind of just fall into jobs, don't you, as you know, and you find that meaning in life. I found myself needing a job in about 2002. I saw an advert in the paper, which is where you used to get jobs back in the day.
I wouldn't know about that, to be fair.
So there's an advert in the back of the paper and it said customer service. I thought, you know what? I could work inside. I could work in an office. I got the job and it turns out it was collections. So I was ringing people up who hadn't paid for the car. So that it was a bit of a steep learning curve, hence the reason why I hid the accent for that period.
When a Scouse lad's calling you for a car payment.
Well,
might be more inclined to.
Well, I think I got a lot of phone slammed down, so I sort of brought it through. But I just said to myself, well, actually, what do I want to do? Do I want to make a career of this? Do I want to stay on the telephones forever? Or actually, I want to be the team leader, then the team manager. And then during periods of time, I went from car finance into property finance, where I became head of collections. And then moved into head of underwriting. And then when I became a head of underwriting, which is poacher turned gamekeeper, I think it was, which was really good. And then I've done change management programs, joined Roma, and then I've worked my way to being on the board as commercial director. So if there was badges for everything that you do in finance, I've got the full sleeve.
Nice.
So it's just through working my way up and working hard, I guess.
Absolutely. And I think Roma are leading lender in the commercial space for sure. And I think your approach to culture and that modern way of business, I think really shines through with your team and yourself and Scott operating that. I think it's credit to you guys for delivering that for sure.
Well, thank you very much. Well, it's a very crowded marketplace. So I think you just need to find out what is authentic to you as a lender. And I think if we were trying to do something that we aren't, which we actually love to collaborate, we love to see people do well, ourselves included. And we love to just work with like-minded people and add value to their business. So that's actually the bit that we want to do. So that's what we set our stall out to be. And that is the lender. So anyone who joins Roma has to have that mindset of relationship building and et cetera. So thanks for your kind words, but it's authenticity, I think, that gets us to that place.
Yeah, absolutely. So we'll get down and dirty with the gritty stuff and really talk about what's going on in the market from a lender's perspective, because I think that's what people want to hear about for sure. So in terms of where I suppose Roma and yourself feel like, where do you feel like we are in terms of the market conditions at the moment?
I think funny enough, we've probably traded our best trade over the past 2-3 years. It has been a buyer's market. So there's been some real good buying opportunities. I think what we've probably seen over the last 2 to 3 years is perhaps some of the more, I call them serious or seasoned property professionals have seen the opportunity to buy well. We have seen the people who are perhaps more part-time at it, either in creation of new dwellings. So we used to see a lot of high-earning professionals from another field start to make money through property because they weren't getting any money back from the money that they had in the bank. Well, as things get tough and interest rates go higher, there's opportunities to earn money elsewhere. So they've exited, and we've been left with these seasoned professionals who've come back in and been able to get some real good buying opportunities and seeing things that others can't see. With the commercial to residential conversion space, all that kind of stuff. That it's been a real interesting couple of years. But I think the people who've been operating in it have done well and have been well equipped to deal with those twists and turns that we've seen.
What are those sort of twists and turns that you're sort of alluding to? What kind of factors have played into that?
Well, I think the first one is the lack of demand. We've still not got enough homes, but the ability for people to raise finance to buy the end product was severely disrupted over the period of time. Or then the ability to put them onto a buy-to-let was prohibitive. And that's where if those seasoned professionals who have perhaps liquidity in other assets we use a phrase, knife and fork the way out, and work with them and work with ourselves where they can navigate through. But if you haven't got anybody who can actually buy what you've just built, that's an issue because you're racking up interest on it as well. If you've got the people who are moving into it, the rent that you have to charge for those people to come in, again, becomes prohibitive for some people. Cost of materials, labour costs as well. People exiting the country that we've seen after Brexit. It feels like it's just been a never-ending story of why not to do it. But then we've got these people who's done really, really well because they took the chance and they went in there and bought really well. So there has been a lot of twists and turns. But I think if you're in property, the house, my house has stood there for 100 years. So you imagine how many twists and turns that's been around in 100 years' time, So you're always going to feel it. And if you're not prepared to navigate those twists and turns, don't get into property development.
Absolutely. What's the kind of the outlook then for the next sort of 12 to 18 months? Is it do you feel like there's more stability, there's more opportunity, or do you feel like this is the new norm now and we're kind of operating in this kind of market that you've alluded to?
I think there's still caution, because what we've learned is not one thing that's happened has been about properties. It's been about war. It's been about a disease or an infection that nobody knew about. It's everything else. It's about the country deciding that they no longer want to be in the EU. It's all those external factors. It's caution. You can't get yourself ready for those things. So something may happen over the next 12 to 18 months. But it's caution, but it's optimism as well at the same time, because we still haven't got enough homes. And a lot of, you and I were talking off air, a lot of the rental stock that we have in the UK is over 100 years old and is slowly becoming not fit for purpose when you start to think about the whole retrofitting and the opportunities of the old Victorian terraces. So there are still going to be the opportunities there. The high streets, we're seeing some really interesting stuff happening in town centre high streets at the moment. People say the high street's dead. It's not, it's just evolving. Again, I'm older than you, but high street, the town centre was where you used to go and get your school shoes and you might have something to eat afterwards. Now it's somewhere where you go for something to eat and you might just pop in somewhere when you're there. But above every one of those shops is the opportunity for people to live.
Yeah, absolutely.
So it's cautious, but it's optimism at the same time if you can find that balance in both. And it's the people who have got the vision and the bravery to go in there and do it.
What sort of deals are you sort of seeing then that sort of gives you that insight to the high street?
Yeah, one of the big things we've seen is old banks coming in. So people are taking banks in areas and the downstairs are becoming, it could be an artisan coffee shop, a baker's, a beautician's, whatever it may be, and then living space above. Obviously, nobody could ever live above a bank in the past, otherwise we'd all want to live there.
Yeah.
But you've got this opportunity now that people are coming back in and living in those spaces because the banks have gone online. Bookies have gone online as well, but they're always in prominent positions. So we see a lot of that hitting our desk. We're seeing a lot of people with the opportunity to buy portfolios. So some of the legislation changes that are coming in are making people think twice about exiting the market. So some people have got stronger buying power to be able to do that as well. And then there's also, I don't want this to sound a derogatory saying, but the part-time landlords, there's no longer an opportunity for them to be part of this now. It is for the seasoned property professional. So them exiting and some of their stock hitting as well. So probably less development than we were seeing previously, but that I think is more about that certainty on the exit. So we're seeing smaller developments because you can navigate 4, 6, 8 units. You can navigate that. If you've got 30 units at the end of it, it's a difficult navigation period.
Yeah, makes sense. I think just to kind of broaden the horizon and sense of who this is targeted at, this episode, I think a lot of people get freaked out by bridging development funding. Yeah. They think, oh, well, bridging, that's really expensive. Yeah. But obviously it's the cost of doing the deal. What do you think from a lender's perspective, I guess, what's your insights to bridging, and how can you maybe, for someone that's a bit nervous about the product, how could you ease their mind in the sense of Roma's approach to lending money?
Yeah, well, I think there's two things. Let's deal with the stigma that bridging has. Bridging is still seen by other finance professionals as perhaps how some bridging was operated in the pre-credit crunch. But it's there exactly to do what it says on the tin. It's there to bridge a period of time for you to create wealth through property. So that is to enable you to buy a property worth X, do some work, make it worth Y, and then crystallize that end value to make money for yourself. It's your best friend for working fast, but it's your worst enemy if you're on it too long. So you only should be using bridging if you are laser focused on what it is you're buying, what it is you're doing, and when you're going to be able to get off, and what's your plan A and what's your plan B. So that's bridging. The cost will normally be at you might get cheaper bridging that takes longer. You might get quicker bridging that costs more. You've got to find what's right for you within your own business model. Our approach to bridging is, let's use easy maths, because I always find it easier to use easy maths, but if someone's buying a property for £100,000, so we're going to lend them 75%, so we'll give them 75,000 and they put 25 in. We can either position ourselves as a lender and say, well, that's great because they've got 25% to lose before we lose a penny. That's not the right way to do business. We position ourselves as we are that borrower's majority business partner to get this scheme right. So if they're buying it for 100, they're putting 25 in, we're putting 75 in. The upside is the customers. So if they can do the works and make it worth 150, fantastic. And we want to partner with the right people who can do that. So our approach is, we want to, rather than look at the asset first, we want to look at the borrower. Who are they? What skills have they got? What have they done previously? Their liquidity, are they going to be a good business partner for us? Then the story. Why are they doing this particular scheme? What opportunities have they got? And only then look at the asset, because a good borrower creates value out of any asset, and a bad borrower destroys value in a good asset. So our approach to bridging is very simple. We want to be with you on that journey as you create wealth through property for you and your family. And we're not scared to say that, if that makes sense.
Yeah, absolutely.
There is a multiple uses of bridging finance, but we've channeled ours down to that's the reason we want people to use it, and the people we want to use our funds are this particular subset.
Nice. I like that answer. Well done, Roma.
No, but I can be honest with you, it doesn't always go right. Like any relationship or any business partnership. But as much open communication that you can have at the beginning, if you think about when somebody lends money from you, borrows money from you, they see you're marketing for 30 seconds, with your sales team for a week, your underwriting team for a month, but then they've got 12 months after that. That's the most important part.
Absolutely.
And that's the bit that in bridging sometimes gets forgotten. The most important part is making sure that they're on track, they're on time. Do they need help? Is there a speed bump? Have they been let down? Do they need more time? Do they need more cash? Again, picking the right person. Or Is this a success moment for them? Are they going to get off early? Whatever that may be. Because if what you got to focus on, if they can crystallize and get some good outcome from that, and we've given them a good experience, the best thing about property investment is that person's ready to go again. It's not locked down. It's not like me buying a house to live in. I bought the house to live in. I'm going to live there 10 years. I'm locked out the game. I'm buying it to crystallize and take wealth out. So.
And that's, I suppose, the long-term approach of, I suppose, your relationships with clients, which obviously shines through the business development team and obviously the senior team as well. So I think that shines through Roma. I see that obviously firsthand because I work quite closely with you guys, but I think that's your real USP. I think you guys do it very well in a crowded market, as we're saying.
Well, you got to enjoy what you do, and you enjoy what you do by doing it with people you enjoy doing it with. And it's just that simple. If you are if you're not on the same page as the people you're working with, and by that I do mean our customers, I do mean our surveyors, I do mean our lawyers, all of that group, or as some people call power team, or whatever that phrase may be. If you don't enjoy working with them, then it's not going to be an enjoyable experience.
Absolutely.
You know, when I go out of bed in the morning, you know, I don't punch the air that I've had to get up at 5 o'clock to get in the car, but I want to enjoy where I'm going to and what I'm doing. And we've got 64 people at Roma who all have that same mindset. It doesn't matter what, some people at the start of the journey, some people at the end of the journey, some people support us to get through that journey, like our HR and our treasury functions and IT. But the big thing for us is we are there because the more customers who go back round and go round again and then tell the friends about it, the better it is for us and the better it is for them.
Absolutely. So jumping from bridging to development funding and sort of the landscape around SME developers and what that sort of looks like in terms of the long-term prospect of the industry. Obviously, there's the Labour government that's obviously come in, which will be a big piece. Hopefully, we'll get onto that topic shortly. And also the whole piece around greener homes, energy efficiency, that sort of stuff. So we'll start with Labour. What's kind of the opinion of, I guess, Roma or yourself or lenders in general, which I imagine you've got a good insight to, of how you think Labour government might impact the market, whether it be positive or negative?
I think a lot of the political answers will probably be my own thoughts. Ultimately, they've set the stall out that they want to create more homes. Whether some of the things that they've done, I think they are missing a trick with the SME house builder. And I think if you look back over, it's not building 100, 200 units that all look the same on a piece of land outside of town or city that makes a difference. It's people repurposing buildings. It's people building 2, 3, 4 units, 10 units. And they're the people who can really help us, because it's not just about having enough stock for a first-time buyer. It's about creating something in the chain that becomes aspirational to create the space for a first-time buyer, to create the space and the mobility for people to maneuver through that chain. And we as a country, we became fixated with new build for first-time buyers. You know, my first property was a flat. I'm sure it used to be you got a flat, then a terrace, then a semi, then a detached, and you'd done it. But people were going straight into the first home being a 3-bed detached property new build. We became so fixated with that part of the cycle, we've lost sight of the aspirational homes that can then sit around. And I think that's where the SME builders do come in. And when I heard the communication from the government, I did feel they were missed out, the SME builders. And those people who are, back to the thing that you were talking there about energy efficiency, they actually pioneer some of the new modern methods of construction, because they can. They can make it stack. You know, we've got a guy up in Scotland who, you know, his approach, I think you shared a video the other day about the polystyrene box and you just fill it in. So it's almost like a Lego house. Doing that, which is fantastic. You know, they're the people who can be innovative, because they have to create something that can turn ahead, because across the road could be a brand new Barrett's or whoever are building the usual development. But it's that quality piece. So we still, you know, I'll probably say this another 3 times before this podcast, we still don't have enough homes.
Absolutely.
So what people are missing is the opportunity to put properties into that cycle. I think that's where the SME builders really do add value. And it's interesting that also the seasoned property professionals are also being discouraged from purchasing properties to create homes.
Mm-hmm. Yeah.
With the stamp duty changes, etc. If you took the people who have liquidity and the appetite to create dwellings for people that are needed, and the people who have the expertise to create homes whilst not sitting and land banking things and holding the rest of the country to ransom,
Mm-hmm.
if you mobilize them people, we get to that target a lot quicker than we would in relying on the tried and tested method.
Just very quickly interrupting this episode, have you got a property deal in mind? Want to build or grow your portfolio but unsure how to obtain funding? No problem. At Roma Finance, they love to lend. The borrower-first approach means Roma deliver flexible, tailored solutions that accommodate the diverse needs and experience of developers across residential and commercial projects. With a flexible criteria, Roma take time to understand each borrower's unique circumstances. Roma's attentive team are always equipped to handle and take on your requests. They will guide and support you throughout the property journey. Colleagues and customer relations are the beating heart of their business. Don't forget to explore Roma's website, romafinance.co.uk, for helpful resources, including articles and case studies to guide your financial decisions. Remember, Roma Finance love to lend. Your property goals are only a call or email away. Now back to the episode. Absolutely. I think it's difficult. I think the whole landscape of the property industry is outdated. And I think it's outdated because of policy that was created to marginalize developers and the profit that was being made and the quality of houses and the quality of landlords that used to be. And I think now we're not in that market at all. I think if there's limits, there's anomalies to that, and there's still old school landlords that hold terrible stock, and maybe developers that aren't producing the best quality of homes, but they are a very, very small percentage in this market, because like you say, you can't make money in this market if you're not that professional outfit. You can't just be a career dentist and doing property on the side, because it's just not viable anymore because of the time and effort that has to go into to make sure that you're compliant, you're delivering to an absolute nth degree on your budget, because you won't make money. So I think the government have taken this blanket approach that affects not just what they hope it would affect, but it has this fallout effect of, not creating enough houses, the impact on people buying to bring properties back to life, the stamp duty, I mean, I don't actually know the figure on how many empty houses are in the UK, but it's got to be a pretty high figure. And I know I can drive through my town and find multiple empty houses that have been empty for years. And yeah, you pay a bit more council tax on it, but the people that own it often probably can't even locate the owners in most cases. So I think this blanket approach is obviously the approach that government take, but the impact that it has, it's that kind of drag effect or fat tail or whatever they sort of refer to it as. And I think from a future perspective, particularly with these new like building systems and the fact that building regs now are expecting you to build these houses that are simply costing a lot more because they have to be energy efficient and they have to meet certain criteria. The regulation, the building regs, the government pressure is that you need to produce this level of housing, but the end product from a commercial perspective is if a 2-bed's a 2-bed and it's 200 grand, and whether it's got an A-rated EPC or a B-rated EPC, 95% of the market, they don't care.
No, you absolutely, they don't live in the real world. I think that when it comes down to your SME developers, when it comes down to your seasoned property professionals, your professional landlords, etc., I don't think people realize it is okay for them to make money.
Yeah.
It is okay. We should be supporting them to make money because they are out there they're doing these schemes when nobody else is. When the bigger builders pick the ball up and go home because there's no one there for their end product, these people are still doing it. There's still developments going on. We are working with people who are creating quality homes. So to disincentivize and make an enemy of the people who should be people, our best friends at a time of need. These are the people who can read. People aren't going to go into St. Helens Town Centre from, the government don't have the money to do it and regenerate homes in St. Helens Town Centre. The big house builders, they don't want to be in a town centre, but a property developer can walk past the former HSBC bank and think, you know what, I could get 6 apartments up there. Those apartments could go to social housing. They could go to people who just, were ready to leave home, and they could be 6 new homes. And they do on that piece. And on the other corner, somebody else does it. And on the other corner, somebody else does it. All of a sudden, you've got 18 new homes you never had, and you've got footfall into the town centre because now you've got beauticians. And that's how you do it. Tens and hundreds of millions of think tanks starting to think about, well, actually what you need is you just need to get people mobilized and incentivize them to do it, because guess what? They do. But it is okay for them to make money from it. And we almost demonize landlords and we demonize developers because we see them through the old-fashioned lens. We don't see them through. It's crazy, isn't it? We demonize them, but one of the best watched programs is Grand Designs.
Yeah.
And Homes in the Hammer. We demonize it unless we're watching it.
Yeah.
So obviously that's my view and take on it. If it was me, if ever I did work all my way up to be in Parliament, which I never would want to, for the avoidance of doubt, just in case, I would have actually been incentivising the SMEs, the landlords, put an accreditation scheme in place and give them a tax break, and incentivise them to go out there and do something. I think it's all about winning votes, isn't it, at the end of the day? And I don't think that subject, if you look at it from our perspective, I don't think it wins enough votes for them to be concerned enough about it, despite the impact that it has on the economy. Because it feels like, to me, I mean, I had it with, I put in planning permission for 3 units in Crewe. I was literally born in Leighton Hospital, obviously Crewe. I live in Nantwich, have done all my life. And one of the comments on Facebook, it might have ended up on Facebook, did an article about it, local news. One of the comments was like, these Southerners, they need to stay down trying to build on our, and I'm like, I couldn't be more local. It just blows my mind how people just instantly, they're like, there's just so much hate and entitlement, like not obviously NIMBYs and all that sort of stuff. And I think that is sadly a large portion of who these MPs are relying on to vote for them, which is why I think they take this approach that isn't pro-capitalism and pro-making the economy better. And it is that very much, let's try and suffocate this as long as we possibly can, despite all the effects that it has on the whole market. It does, it's great. You're exactly right. We that tells you then we're not tackling the problems.
Yeah.
And in 5 years, somebody else might be doing it. And in 5 years, there's no chance of having that long-term plan that gets stuck to.
Yeah, absolutely.
It's almost as if it does need a 10, 15 year plan, joined up cohesive plan. And even if the incumbent party were in for 10, 15 years, the likelihood of it being the same leader is less. And it just, that's why allow people to go out there and start to deliver this thing. If it was okay to do it, we've allowed people to go out and create wealth through property when people weren't buying much property.
Yeah.
We've allowed people to go out there, and that still kept lenders in business, lawyers in business, estate agents in business. The whole eco chain has still been kept buoyant by these property professionals, seasoned property professionals, people having a go. They're creating newer homes, which are better for families to rent. They're creating newer homes, which are good for people to move into, which creates other stock that becomes available. All of a sudden, that's a bad thing. It doesn't make sense.
I think amongst all of that, though, there is definitely opportunity. And obviously, from your own perspective, you guys wouldn't be in business if there was no opportunities in the market, because no one would be borrowing money to buy these opportunities.
Well, definitely. All that happens is, again, it goes back to that seasoned property professional SME builder. They just have to factor it in. They will make it stack, and interest rates, if they continue to see downward, then the cost of lending becomes a bit easier. The marketplace becomes a bit better with regards to the exit strategy. Who knows where we'll be in 18 months? Could be in a really, really positive place. The one thing that won't stop is people will not stop building houses. People will not stop creating homes. People will not stop needing places to live. It's just a readjustment, which is why I said it's cautious optimism. We weren't expecting the stamp duty piece in that budget.
Yeah.
But then when you actually sit down and you think about it on a 200 grand normal transaction, which is probably the average of an investment property, works out about an extra £5,000. So if they're not going to do a deal for £5,000, they probably shouldn't have been doing the deal in the first place.
Yeah, absolutely.
So once you get away from the headline and the outrage, but it just felt like a bit of a pullback. But people are still doing biz.
Yeah, absolutely. Valuations is a thing that I've heard a lot about recently. People, particularly lenders now, having to adjust their LTVs and LTGDVs based on down valuations. And I think it's one of those open topics that no matter who you speak to on valuations, someone has got a different answer to how that value or how they value something or how the valuation's put together. Is that something that has sort of filtered through to Roma in a sense of, I suppose, down valuations in the market that we've had, or has it been sort of, I suppose, a consistent outcome in a sense of what that might look like from your perspective?
I think, even when times are in the boom periods and property prices are increasing, you're still going to get some people where the valuation comes in less than the person was expecting. And that's where you've got to ascertain, is it a down valuation or a right valuation? And if it's a right valuation, then you deal with it and you renegotiate the deal or whatever it may be. As long as there's a consistency around valuations, the methodology that's being used. At Roma, what we like to do is we like to look at our own comparables as well. And if we see something different in the comparables, we'll open up dialogue with that value to have that quality discussion, because ultimately we're all there to get the deal done. So I think it all comes down to that plausibility piece. And if we're comfortable with where the valuation comes, it all comes then back to, if you pick the borrower right, if you understand the story, maybe that valuation or that property has come off, but you know that the end value, as long as it's the end piece, if that stacks, then you can maneuver with that person.
Nice, okay. And from a kind of loan to value perspective, what sort of the risk appetite for Roma?
I think we've always been conservative on it, and there's a really good reason why. We never see ourselves as being over 75% on a bridging loan, and
that's net.
Pardon?
Is that net?
That'd be gross.
Gross, right.
So probably nets down to about 70 because we retain interest.
Yeah.
And we never see ourselves on a development being past 65% LTGDV. And the reason for that is, if we went right up to the hill day one and you hit a speed bump and you need more time, your margin is squeezed immediately as a customer.
Yeah.
If you need more time, if it takes longer to sell the units or move out, your margin is squeezed immediately. So by working with the customer conservatively day one, we get the skin in the game or whatever, and we put ours in, it leaves that opportunity for, if we had to give some more later on, if we had to give some concessions, if we had to give more time, it gives us all that maneuverability. So we're not outlandishly prudent at 75, 70. There's some lenders who'll go high, and good luck to them as well. Like I said, it's a crowded marketplace. Everyone's got to do what's right for them, but we do it from the side of, let's work from the base of, can we have that maneuverability just in case something changes? And in the last 5 years, something's changing every year, isn't it? So
absolutely, yeah. Blimey, I don't think I can keep up quite sometimes.
It's exhausting, if I'm honest with you. It gets exhausting, because just when you feel like you're getting on something comes along. But I'm really motivated and inspired by those seasoned property investors, by those SME builders who dust themselves down and find the new angle. If you would have said to me 4 years ago, it's buying commercial properties and turn them into residential as a thing, I said, you'd hardly have any of them on your desk. You'd say, well, you're talking about it's new builds, it's this, it's that. Now it's completely the opposite because they are finding the opportunities, and then by working closely with them, we really buy into those opportunities as well. So whilst you listen to the radio in the car on your way into it, you think, oh, that doesn't sound great, does it? You get invigorated by speakers like a Lorcan or something like that who gives you that energy that you understand that actually there is enough different opportunity. And the people who can diversify and the people who can maneuver quickly, they're the ones who's done really well in the last 2 years.
I think that's the key to it. I think property is difficult, but if you're passionate, well, any business is difficult. Lender, running exhibitions, buying property, it's all difficult. And if it was easy, everyone would be doing it, as the phrase goes. So I think if you're approaching property, you've got to have that professionalism about you, like the likes of Lorcan and other developers of that sort of ilk. I think that's the approach you've got to take. And I do get into the habit of talking about the realities of property, and I'm not trying to put people off property. I'm trying to make people understand the realities of investing, and it is incredibly lucrative if you get it right, but it can also be very risky if you get it wrong. And I think that comes down to the approach of how you adapt, how you whether it be full-time, hopefully that you're in property, what kind of systems and things that can kind of trip you up, particularly from when you're taking on lender money, your own money, investor money. You don't want to lose that. You want to be able to move forwards and in a positive way. And you need to get that right by understanding where the risks lie and then mitigating what that is.
So investing's investing, isn't it? It's the same if you're buying stocks and shares. It's the same as if you're doing crypto. You wouldn't just throw $5,000 into Bitcoin and think you're going to get 15.
Some people might, but
and you know what? Some people have done that with property, which is why, again, it's all about the borrower understanding who they are and what they're looking to do, and are they the right business partner, rather than just take the money from them and see them later. But
just on that point, then, sorry, I'm interrupting, but it'd be interesting to know what your sort of ideal, I suppose, client or borrower, what they sort of look like. What are the sort of things that you're looking for? How can someone build a great application to get lending?
That's a really good question. And I think we're quite laser focused. We believe that there is always 3 personas who we deal with. The first persona, which we haven't seen much of recently, was the high earning professional in another field who wanted to create passive income through property. So what you normally find is they might team up with a building team. And we've done a lot with pilots, dentists, doctors. So they've got that transferable skill that they can bring to a scheme. So such as project management, good head for numbers. And they also have that reputation and liquidity to help them maneuver through. Seasoned property professional, listen, they're the golden goose everybody wants. They've got a portfolio behind them of assets that they can trade upon. They know how to buy well, and they know how to sell well as well. And then the one that we'd love to support, which I think is a very underserved market for us, an underserved persona, but is a really good market for us, is the experienced property tradesperson who wants to do it for themselves.
Yeah, okay.
So what we find there is chippies, certainly chippy. I think they're the best ones, actually. We've got a couple of plasterers. We even got a couple of scaffolders as well, funny enough, where they know, they normally do it in the area that they're from, so they know the area really well. They buy a property, so they only own their own home, but they're going to buy a property and they're going to flip it or keep it. But they've got a torch on their head at midnight, still plastering it. They know how to procure materials well. They know who's the best person for the job, and they will live, eat, sleep, and breathe that project. And some of our best SME developers that we work with now started off by being that underserved piece. So they tend to think, rather than knocking on someone's door and saying, "Can I have that £20,000 for the extension now, please?" They want to be a bit in control of their own destiny. So that we do a lot of work with those people, and they're really exciting to work with.
Yeah, I know a fair few of those types of people that, got the head torches on at midnight, plastering, painting, getting stuff done, and then wake up at 6 a.m. and do it all again for a client. It's different breed of person. Credit to them.
The credit to them. And you know what? They back to what we were saying before, but that's supporting them people. You know, they're creating homes and they know how to do it.
Absolutely.
So they're the 3 people that we operate with. If somebody wanted to come to Roma just to get a bridge so they can get some money to pay off a tax bill or pump into the business, not really for us. There's a lot of really good bridging lenders out there who will do that. We just want you to come in, create either value in the property or derive an income from the property.
Just jumping back to LTVs, LTGDVs as well, just for those that maybe don't really quite understand the lingo with that sort of stuff, and also maybe touch on the net and gross loan amount, how that works.
Yeah, so LTV is probably the most common one that I would anticipate most people watching know is loan to value. So it's the value of the property, the loan that you're getting against the value of the property. So easy maths. If the property's worth 100 and the loan's 75 grand, then you're at a loan to value of 75%. Gross is the total amount that you would be borrowing, which includes any fees or any interest that may be going on. Net is once those things have been deducted. So there might be people who, even if you've not done property development yourself or whatever it may be, you'll know that there's a product fee normally with a mortgage or whatever that normally comes off, and it's the amount that you're left with. So an LTGDV is loan to gross development value. So how much will the loan, by the time it's completed with the interest, etc., be against the finished asset? So LTV is the starting asset, the value of the current condition, current usage, current planning. The LTGDV is against the end value. And that's where the valuer will say it's worth this today. And based on their assessment of the works that you're carrying out, based on their assessment of looking at the end product and the comparables within the marketplace, the value of that will be this. And that's how we operate.
Absolutely. So in simple terms, the rolled up interest, the net amount, that is, if you borrow 100 grand, you got 10% interest, ignoring arrangement fees and that sort of stuff, you get 90,000 day one.
Yep.
And when you pay it back in 6 months, you pay 95,000 and obviously retain it. If you keep it for 12 months, you pay back 100,000. So you retain the interest.
Correct.
Yep. And then LTGDV is if you've got a project that's worth £1 million, and obviously in your sense, you can borrow 65% of that.
Yeah.
You can, and that doesn't necessarily mean you give 100% of the purchase price.
No.
It means that if the project's worth, or the land's worth 200,000, you give 75% of that day one. And then the remainder you take in drawdowns up to the 650,000.
Yeah. So what normally happens there is you agree a facility with a customer. So you have a facility which would normally be up to 100% of the cost of the works. You would go away and do a schedule of works against your work schedule that would be independently verified by a monitoring surveyor. At that point, they'd say they have done £30,000 worth of work. I've seen the kitchen, I've seen this, and you'd get the £30,000 back. That then you can use to fund the next piece, and then you get the £30,000 back, et cetera, all the way through. So it's just that whole, it's like a facility to enable you to get to that end goal.
And it all works in arrears, doesn't it?
Always works in arrears because it de-risks it as well. So what you might find is that, again, because we lend a lot now to experienced property professionals, seasoned property professionals, or those experienced tradespeople, they've got really good terms with builders' yards or whatever that may be. So they're able to factor that in as part of it. They can do the work, get the money, pay the invoice. Or some people might float the work, get it verified, get the money back, float the work.
Yeah. And if you're operating in sort of lower land value property prices, then loan to cost also comes into play in some cases.
It does. That's the total cost. So it's the cost of the security plus the cost of the
what's Roma's loan to cost on usually?
75%.
So yeah.
Good job I read the product guide on the way in.
Testing you. It's a good job you know your product.
Well, you've got to know it. As with anything, there's always a degree of flexibility. Sometimes you might, on a certain scheme, rein it back a little bit because there's a bit more risk or uncertainty going into it. Or some of them you might be a bit more bullish and go slightly outside your parameters because it's a tried and tested method, tried and tested customer. But I would say operate off the 80-20 rule. 80% normally follow our product set.
Brilliant. But generally speaking, Roma are pretty steadfast in terms of wanting to lend and find new
love to lend.
Yeah, borrowers.
Yeah, love to lend. Listen, if we're not lending and people don't pay us back, we're not creating wealth for ourselves. So we absolutely, we say this every time, we don't earn until the money's out and we don't really earn until it's back. So we are all about, we've got to make sure that we act fast, we act with integrity, and we're trying to get those deals paid out, because normally people are using a bridging loan or a development finance loan because they can procure it well, procure it quickly. So they can jump the queue to say, I can have this done in 28 days. So we've got to match that. And some people will come to us because they purchased at an auction. So, there's a reason to use a specialist finance, and that's the special reason is normally pace.
Absolutely. Amazing. Yeah, love to lend. You caveated into that really well, which is obviously your tagline.
Yeah, well, it is. Back to what I said right at the beginning, you got to love what you do. You've got to have that reason. Of course, we'd love to lend. If we were about lending, that's what the customer's going to feel. Lending's meh, whatever that phrase may be. Of course, we love to lend because that is what we're there to do.
Yeah.
We're there to lend money to people who want to create wealth through property. And the byproduct of that is quality homes going back into this country, which is what's needed. So in our small part, we're creating that, we're doing something about fulfilling that need for this country.
Absolutely, which is where we align with the show for sure. We share that value, and in terms of what we want to do for the market, which is provide a platform, accessibility to moving us forward to build more, lend more, and just grow the market.
I think, I think the shows that you run are fantastic, because when you can stand in that room, you can stand in one corner, you can see the whole spectrum of people who can help you, who can assist you, who can be that business partner. I think where we had our stand last time, we were next to people who were all about dressing a property. I think they had the best stand actually, and it was great. And then there's guys who I know who can help you with regards to procurement. There's people there who can help you with utilities, people there who can help you with insurance. But more importantly for us as a lender, we then build our network of people, because the end user, we all want to work with that same, which is a quality person who's looking to do a scheme. So actually by working, what I really like about your show is that everybody in the room sort of has the same or similar ethos.
Absolutely. Yeah, we try to create that, and hopefully we've achieved that, which is great to hear.
I think it's bigger next year as well.
It will be, for sure.
Yeah.
Absolutely. Great stuff. So if people want to get in touch, maybe they've got a bridging inquiry or development inquiry, how can you go about doing that?
Well, listen, we have the website. I'm sure the details for Roma's website will be below. You can reach out to me and the team on LinkedIn as well. And you will probably, what else you could do? Go to your shows.
Yeah.
Because we're always there. We've got a stand there. But just get in contact with us. You can come via a broker as well. Brokers have a really good part to play in this. We do operate direct. So if you want a relationship direct with a lender, we're really comfortable and well skilled with that, and we have a specialist team. But we know that sometimes people need that broker who can give them the whole of market lens, and they will find the right home for them, which invariably is Roma as well. So
yeah, great stuff. Happy days. Well, thank you very much for coming on today.
No worries. Thank you very much. Thank you. Cheers.
Pleasure. Thank you very much for tuning in. Hopefully it was a good insight to the market from a lender's perspective, and hopefully it's giving you some confidence to go out there and start looking for some more deals. As I always say, please do like and subscribe, and if you're listening to the audio version, please do leave a review. Hopefully I'll catch up with you soon. All the best. Take care.